What's up, everybody? Sal here with Simply Investing. Welcome back to episode 6 of Market Close as we talk about everything that's going on for next week and what's kind of happening this week. And haven't been live for a few days, so I do apologize for that. We've been rather busy lately, but if you haven't been watching the YouTube channel, I've been posting shorts about everything, so you can definitely go check that out. Give us a like and subscribe. If you hear the printer going off, we're still printing in the office because it is Saturday and we are still working. So we're all chasing that. But we're glad to have you in here. Cody should be back in here shortly as we discuss what's going on in the markets. It's been a wonderful, fun week, I guess you could say. Everything's kind of going up, down, left, right. Lots of layoffs still happening. EVs, Tesla, Rivian still having some issues. New startups still having some issues. We also have crypto kind of climbing back up out of the slight dip that it took. So definitely some fun things to talk about, and just some things going on with the crypto version with XRP, Dot, Chainlink, Quant, Solana. A lot of fun stuff to talk about. But when Cody's going to come in and talk about that in a little bit, let's go over some basics here as we got crypto market 62 greed on the index. Bitcoin dominance still at 54%, ETH still at 15%. We're up almost 0.25% on total market cap, up to 2.4 trillion. So nothing really crazy happening here. Bitcoin kind of settled down at 66K. XRP still holding slightly above 50 cents, and we have Solana still holding it in the high 100s. We also got Polkadot back over 7, Chainlink back over $16. We also have Hedera still holding 11 cents. And of course, we got good old Quant, which I think is still holding. Yep, still holding right at $98. Still all great price targets, but it's going to be stagnant over the summer as we hit this lull period before we go into the bull run. But as we talk about the market share, we're still at all-time highs with the stock market. We got the Dow at 40,003, so kind of up like a little over 0.25%. We got the S&P 500 at 53K, and of course, it's not 53K, but 5,300, and we got NASDAQ all getting close to 17,000. So they are officially still at all-time highs. So it's definitely going to be some craziness going on with that once it kind of settles in, because everyone's expecting it to go down from its all-time highs. But talking about the stock market, we have here quite a bit of list of a few known companies that we're looking for earnings on. So nothing really spectacular on Monday, although Tuesday, the one I'm interested in is Lowe's. I really want to see what they'll bring to the table in regards to what their earnings were like over this past quarter. As you know, it's been a struggle for people to even be buying groceries and everything. So I wonder if the home improvement has stopped, or did the summer season spark up grill sales and outdoor stuff. What's up, Cody? Welcome in. I kind of
What
went
is
over
up,
all the basics already.
man? I'm excited to start work on Monday. I've taken a month off from work just because I quit my other job and I'm finding this job, but I start work on Monday. Thank goodness, because
Yeah,
dude, it sucks being at home.
I bet it does. I bet it does. And well, glad you got found a new position. Hope it goes well for you.
Oh, I'm gonna make sure it does.
Absolutely. So we're going to talk about crypto towards the end. Let me just get over some of the stock stuff. I know you guys are more interested in crypto anyway, but let me get the stocks out of the way because there's some important news and things around the economy.
People are really trying to keep the AMC GME going.
Oh, yeah. I think GMC stock fell 30-40% already.
Yep.
Not
I don't
entirely.
I don't see it doing what it did.
No. Yeah, it fell back down. Let me just take a look. 5-day period. Come on, 5 days. Can I get it in 1 month? Yeah, it fell about 50% already.
Yeah, And that's why I tell people, I know you have people like Roaring Kitty and Andrew Tate telling people to get into GME, and that's breaking the matrix. But in reality, I just think it's stupid to just FOMO into something like that. It's
Yeah,
stupid.
I mean, you would have doubled your money if you got in right at the beginning of the day because it was in like the low 20s
You had to
and
take
sold at
profits.
58. But people were just buying and holding, and I don't know how long this company is going to hold through with digital downloads. I mean, the console is not even being a big thing anymore, so
No,
I don't know how they're going to survive the next transition. This might be the final decade for GameStop. They might be
by
going.
2030 they'll be abolished. Yeah.
Yeah, they're probably going to go the way of Radio Shack. Sorry,
Yeah,
not
and
sorry.
we're seeing the same thing with Best Buy. We're seeing the same thing with them like closing stores and taking the Amazon route.
Hmm. I mean, right now, given the current state of everything, and with technology, you kind of have to demo stuff, show stuff, and they have that stuff, and they're hitting record losses on theft and shrink. They're definitely gonna go that route. I think Best Buy will only keep open storefronts for like Geek Squad, like to fix your stuff, repair,
Yeah, for cars.
or to buy refurbished products. Like they'll have them there. I think that'd be it with them. But I don't see GameStop doing well. I think this is going to continue to go down, which is not going to bode well for, unfortunately, for the people that FOMO'd in.
But see, in August 2020, it was the obvious play. That's why some people were pointing that out because, if you were paying attention to it, it was an obvious play. Now it's not, though.
Yeah, but if we go back and look, we go to all here, like here, that's when the like no one would have known, like at a dollar and like we're shortly under a dollar, about a dollar, and then it didn't until the beginning of 2021 that the short squeeze started happening,
Yep.
and it's just been going downhill since. I would have recommend just cash out your position, especially if you made life altering money. That would have been a very, very, very good idea.
And see, my thesis is the reason why this is coming is because the reason why people tried to bring GME back is because one, it's artificial, and two, because the tough times and how bad the economy is, people are wanting that era to come back. People want it back so bad.
A little bit of nostalgia going on. I won't argue that. But let me get over some of these earnings, what we're expecting here, and some of my opinions. Now, keep in mind, guys, these are just my opinions. So, but I really want to see what Lowe's will bring for the earnings call because I'm kind of guessing, like many others, that they're going to go down. But I wonder if they're going to hit the target or they're going to miss it by like 10% because they've been having some supply issues a little bit. Their appliances have been coming in delayed, you know, uh, and the fact that the quality of the wood that they've been sourcing, I guess, has been going down as well. And overall customer sentiment is just changing because most people they're just living with broken stuff or do it your DIY projects are just waiting longer. So I don't know if they're going to have a good earnings call. I don't think so, but we'll have to see. Their earnings calls on Tuesday, most likely after market close. So, but let's go on to the next day because there's some important stuff on there. We got Nvidia giving an earnings call. I'm not too worried about them because I have a feeling they're going to be right at or beating earnings. It's TJ Maxx and Target that I'm really interested in because these are recession companies like Walmart and Dollar General. So when people are tightening up their budget, they're trying to find better alternatives. TJ Maxx and Target tend to be where they go, especially if you're tight on budget. You got a family, you got growing kids. TJ Maxx, those companies tend to be where they go because you can get the clothing for a little cheaper than you would at a traditional department store, or even they got kitchenwares, they got other things, and they got plates, silverware, stuff like that, even toys and stuff in there. So I think they're going to be heavy purchase. I expect them to do well over the next couple years, especially with the rate of inflation still hitting above 3.7% every month. I mean, the CPI came out at 3.9, and it's not bad, but it's not where people want it to be, and it's still affecting people's everyday spending. So I presume that when the back to school season hit, I wouldn't be surprised if for the Q3 earnings call that TJ Maxx or the TJX companies are going to do very, very well on that call, on that quarter. Target kind of same thing, but I also think people are tired of the crap from Walmart, and they're getting slightly better stuff. Like, why buy a $5 toaster that lasts for 6 months when I can buy a $10 toaster that'll last for 5 years? So I think people are switching that mindset, saying I want the best quality for the best price. That's what people are kind of gearing towards,
That's
and
how it should be.
that's how it should be, exactly. But given the last 30 years, most people just wanted the cheapest price, didn't really pay attention to quality, which is how Walmart, Dollar General, the Family Dollar chains survived. And as you guys know, on one of my older videos, that Family Dollar is closing down 1,000 stores, thus laying off about 25% of its retail uh, workforce. But we got a lot of layoffs. Even Walmart's laying off people. But Walmart generally tends to lay off people during these times, but it's just all the trial and error stuff that they were doing, the experimental stuff, the things that that may or may not work, that they're shutting down. So those departments are closing, and they're just kind of laying off people. They're not laying off the core bread and butter. They might be taking out from extra management positions or excess management positions, like getting rid of a front end manager and having like the general manager and co-manager kind of deal with managing the front. But I don't know how that's going to happen, as Walmart is bringing back cashiers and getting rid of all the self checkouts down the road. So to fight I think they had like over 500 million in shrink. So we'll have to see. But I'm looking. I think those two companies, Target and TJX companies, are going to do very well these coming years, and their earnings should reflect that. As you guys know, there's nothing on Friday, but here we got Dollar Tree, which I expect Dollar Tree to be at a loss. I expect them to be at a loss, and probably also announcing that they're also going to do like 20-25% layoffs, because Dollar General's been kicking their butt. And if you haven't watched the Dollar General video, it's you can go to our YouTube channel, go to videos. It's down there a little bit, and you can certainly find it out. But Dollar General has been kind of filling the food service gap where Walmart has closed down neighborhood market, so they're building their own kind of neighborhood market style store, and they've been doing very well with it. And they're nice, they're clean, they're starting to sell gas in more locations. I definitely think that it's going to beat out Family Dollar, and I've been seeing Family Dollar's been closing locations, so I don't expect them to, not just Family Dollar, but Dollar Tree. I expect them to announce that they're laying off, doing a massive close list as well. But all retail's closing, because you have Macy's closing another 15 stores. You have Best Buy closing like 10 stores. You have Target closing another 50 stores. I mean, you have a lot of retail companies just shutting down stores, mainly in the inner city areas, which is unfortunate, but that's just the way things seem to be going. And of course we got Ross stores as well coming out this coming Thursday on the 23rd. They're also in with the TJX companies, that I expect them to do very well as well, because they offer discounted factory defected products. And I'm kind of like you see here, like Deckers Outdoor Corporation. Don't really pay attention to them, but if you were, I would expect them not to make as much, because new home construction is slowing down, as well as contractors are starting to close their doors. So there's less and less people fixing stuff and doing this type of stuff. So I have a feeling that it's going to, they're going to fall to the wayside. not go out, but they're going to have a couple rough years. But speaking of rough, nothing's more rough than Tesla and the EV area. As you see here yesterday, Tesla announced that they're laying off another 600 jobs in addition to the bunch they're laying off from the Austin facility. And Rivian also is laying off as well, more with their startup struggles and things like that. And I don't know how much more these guys can trim the fat to keep to stay afloat without being able to borrow the free money or the cheap money that's been sloshing around over the last 15 years. And with venture capitalists kind of falling by the wayside, the only place left is sovereign wealth funds like the Saudi Arabia and Singapore sovereign wealth funds. But even that, I don't know. The demand is just not there anymore. And I think the city it was really inner city people that really wanted to get these, which they are useful. Uh, EV car out there, but when you're out in the rural area, this is a hard thing to have because you got to drive so far to get to where you got to go to just even grocery shop. So people are still kind of have a range limit fear. Um, there's not a lot of mechanics out in the smaller areas. When I say smaller, I mean like 100,000 people populous areas that are capable of fixing this. And that's been, if you watch a lot of Tesla's owners, that's been the biggest thing. Like they live like 300 miles from the closest Tesla dealership, and they can't get these damn things fixed quickly. So, and most people, you bring your car, you get it fixed, takes half your day, you move on with your life. You can't ship your car for a couple of weeks and then have it shipped back, to get it fixed when you live in an area where you have to drive to get to where you got to go. So, I think the demand for these are going to go down. Ford's suffering with the Mach E and the Lightning models. Rivian, if it wasn't for the Amazon, they'd be suffering as well. Those trucks are not selling as much. The next one is Lucid, which I like the style of the car. Because like if I personally was going to buy one, I'd buy the Lucid. But even Lucid's on its like final strings. I don't know if they're going to make it through this drought for EV vehicles over the next few years.
I don't even buy a Tesla or anything like that. Like, in my honest opinion, like, yes, this does sound like, a Bitcoin maxi or crypto maxi mindset, but I'd sleep much better at night holding Bitcoin over something like Tesla. That's just me.
Oh no, I fully agree. I think the EV, if you're in those positions, I think it's come to a close. Um, the the popularity behind it is ending because even on YouTube, it's mostly negative stuff about these vehicles as the build quality,
I
the
don't see
crashes.
anything positive about Tesla. Like, even from Tesla owners, like, I don't hear any passionate Tesla owners ever. They just say, "Oh, like, I got a Tesla."
Mm-hmm. Oh no, I agree 100%. I agree. It's just one. It, they're like kind of cool to have, but no one has really given what the market really wanted. And I've been saying this for last year on whenever we talk about this is that no one really cares about the big touch screen. It's only like quirky millennials and Gen Zers that want it, the YouTubers and stuff. But as far as it being practical, people just want a cheap, reliable vehicle that can get them from point A to point B with value built behind it with low maintenance costs.
I'd say the more technology, the worse it is anyway.
Yeah, like they if they can make a model no touch screens, no self driving, just an electric vehicle that gets you from point A to point B and is comfortable and has has like a big trunk and a big front trunk. I think that they'll make a lot of
So
money.
my question is, why don't they touch on that? Like, we need to see more electric vehicles. That, if they really want to push this EV narrative, like you said, no big touch screens, no all the bells and whistles, just an electric vehicle that's reliable, gets you point A to point B, and is affordable. Nobody, it's like, even if I had the money, I would not want to buy a Tesla. I'd rather buy something like a Lexus, you know, than a Tesla. That's just my opinion.
Well, Part of it is, I think, because money was so free, the ability to borrow money was easier. So people were banks were willing to lend $150,000 for these cars, and the value was staying stable over the last 10 years. So banks were like, okay, you want a Rivian? Sure, we'll put $10,000 down. We'll lend you the 160. Boom, we're done. Now banks are like, well, no, we'll lend you 50,000, and people are like, well, I don't want the car anymore. So, and then the value of those drop tremendously because now there's a surplus of these vehicles, and they're trying to come out with cheaper and cheaper models, but their mindset is still on basically trying to make it a luxury EV vehicle instead of just saying I want to make an economy EV vehicle. Once someone makes an economy EV vehicle, kind of like how Toyota came out with the Prius was widely successful as a hybrid because it was simple. It didn't. It was just we save you gas. We save you money on gas. That was the whole point, and people loved it. And celebrities were buying it. People were buying it. It was much more efficient. People were saying instead of filling up 4 times a month, I'm only filling up once every 3 months. It's great. And even with replacing the battery, it's still a cheaper option to getting a traditional combustion car. I don't know why they're not making those. I think people are too focused on flashy instead of just saying quality. Get like we've been saying, get the best quality for the best price.
Yep.
They're not doing that. Well, people now, the consumer is focusing on it, but the companies are not. They keep trying to make these ultra luxury vehicles. Let me just pull up because I don't have Lucid pulled up, but I'm gonna pull that up for you guys here. Where is it? There it is. Okay. We'll just search that all miles there. So, like you guys can see here, this is what it looks like, and they got various versions of it. It's a nice car. It's you
Would
know
not pay that price tag at all.
no,
Hell no.
no, but like you see what I'm saying? Like these are low mileage. Like we're not talking like 70 to 100,000 miles. We're talking like 7,000, 19. I think you scroll to the top. I think the newest one, yeah, see 225. That's a new car. That one's used. I mean, someone used like this 2023 model right here. Someone used this for a daily driver and didn't like it. That's basically what this is.
Who would pay $129,000 for a Lucid when you can? There's so much better vehicles on the market for that price tag.
Yeah, yes, there are. Now, I like the look of it. I like the style. Like if I was to get an EV vehicle, it would be probably be this car. But I mean, Mercedes has one very similar to to this design for half the price. So it's like that. That's what I'm saying. These guys are going too high. Like the average person cannot buy this, even though maybe that's not their clientele. But their intended clientele isn't buying it either. So
You know
you
what's
got to
hilarious?
go ahead, Cody.
I just saw something pop up on Twitter. Somebody posted about how, Bitcoin's back over 67K, and then Andrew Tate responded and said, "You're welcome." Thought that was kind of funny.
Yeah, I mean, he was posting old videos of him buying Bitcoin back before like during like the very beginning of the lockdown. So I don't know. It seems like that's a whole nother story. It seems like the end's coming for them too. So
Yeah, that too.
it's like I think people are fed up and done with all the pandering. Oh, I want to say something too. Like I did notice that the forex traders, all the people pushing the forex trading courses, they're all gone.
Yep.
They're all
Haven't
gone.
seen him.
I haven't seen why because you can't trade currency like that. Well, I mean, there's many people who try, and over my 20, I'd say 25 years of paying attention to finance and stuff like that, I've never seen someone truly successful at trading currency. They all lose money. I don't even know why they bother even having that market. I mean, excuse me. There's some people that make money.
They
There's some
use demo
people,
accounts.
and yeah, some of those course people are using demo accounts 100%. Now, I've seen actual traders working for firms and banks, and they don't make money, but they make commissions and things. But I don't know. Sometimes they make a good bet, but they're holding long term. They're not day trading the stuff. That's the thing, you guys. Like they're not day trading it, and it's impossible to predict those type of swings because you just never know. You really never know, especially when you're not dealing with a when you're dealing with a third world currency, not a first world country's currency.
I
It's
want to kind of touch on what you said about, the Tates. Not saying that I fully agree with them either, but it's like a lot of people are saying that they're faking the lifestyle, that they're faking it, that they don't even have that kind of money, and they very well could be. Like nobody's ever stopped the thought, maybe these people are faking it.
yeah. I think now it's starting to come out like that they don't have they're not as wealthy. Now, don't get me wrong. I think their net worth is between 10 and 12 million. Because like at the rate they're spending and how many people they have logged into their course communities, yeah, they are making a very good amount of money. But he's not worth like
100 something
500.
million.
Yeah, he's not worth $100 billion. Like I remember
No,
when he said that, I was like, there's no way that he's worth that.
he
But
has some millions, but not hundreds of millions.
yes, he might have been able to earn it like that, but to be honest, with the lifestyle that they're living, they are what. Whenever someone says is spending a large amount of money and spending it just as fast as they're earning it, it's usually because subconsciously they have what's it's called ill-gotten gain syndrome, where you feel guilty for having the money. Now, sometimes it's legitimate, like an NFL or NBA player gets drafted, starts a multi-million-dollar contract, and is given $5 million up front. They tend to spend it very quickly because they feel like they haven't earned it because it
I've
came.
seen one of them players buy a Eurus instantly, like an NFL player. I saw a body cam video of an NFL player getting busted for having a firearm and weed and all that. He was in a Eurus.
Yeah, and well, you also got to remember those guys. They're still very young kids. Like you're talking now between 18 and 21. They're not making some of the best decisions, which is why the NBA got in trouble. That they basically when they draft young men, they have an entire financial course for them now, and who to align yourself with and stuff like that. But that's entirely another video. But what I was talking about, like with the Tates, is that well, when we keep talking about the Tate effect, and they have pushed, I dare say, hundreds of millions of young men, and I mean young men between the ages of 15 to 25, to start doing day trading, investing, get money by any means necessary. And a lot of them are going to push money into stocks and crypto. And I have a feeling during this stagnation of the economies across the globe that people are just going to start putting money mainly into crypto, even though it's going into fake projects or scam tokens or meme tokens or whatever. Some of it may go into actual legitimate projects, but it overall it's going to produce a significant bump in value because even the scammers, they go and they buy Bitcoin and Ethereum. So
Yeah,
they're actually going to raise the market on that.
I saw a post today that he was trying to give away 10 grand, and I doubt he's even going to give away the money. It's just for likes and followers.
Yeah, it's like you guys got to realize like this stuff let's just take another one of the red pill channels. They were one of the highest earning channels. I think they're in the top 3 on YouTube, just in channel wise, as far as podcasts. And I don't think people realize that there's a lot of money to be made on selling division. Like when you can get someone like say Alex Jones spewing random things, he he upsets enough people that they tune in anyway. Like he's one of those people that he pisses off people and he makes people rallies people too. So no matter what, he's bringing attention. That's what like some of those are, and they make a lot of money doing it. I think one channel alone what started with it, and within a year was making almost $2 million a year just off of ad revenue. Like, so you guys gotta understand, like they are selling they're selling division, and it's very profitable to do so. And tagging it alongside with online courses and everything, it's just it's amazing how much money they actually were bringing in. And that's where I say, like, if someone's telling me that you're not wealthy unless you're constantly eating out for $30,000 a night, that means it's ill-gotten gains. Because I don't see Warren Buffett doing that. I see Warren Buffett buying 2 cheeseburgers and a cherry Coke from McDonald's and a large fry. Like that's what he's eating. So it's
Yeah.
like when you work hard for your money, you're less likely to waste it. If you got your money fast or through ill-gotten gains, you tend to burn it as fast as possible.
My
And that's
thing
usually,
is, it's like if you're off the internet a lot.
I'm
Sorry.
sorry, what did you say, Cody? No, go ahead.
I said usually when you're off the internet, you don't really see that type of stuff. I didn't start seeing any of this type of stuff until I started like being on the internet more and more, and that's when I realized like even being on X on Twitter, it's like I can't even be on Twitter without seeing some shit that'll make me go, okay, that's enough internet today.
Yeah, right. So it's just it's like there's a reason why Warren Buffett's been the most successful trader. If you follow his habits, you're probably going to end up wealthy. You follow Dave Ramsey's advice, you're probably going to end up wealthy. Now, you might not end up with a couple hundred million, but you probably will end up with like 2 or 3, maybe even 4. Spend less than you make, and you'll have money to invest. Invest in things you only understand and you believe are undervalued. You'll make a lot of money. You follow those 2 strategies. That's the sauce. It takes forever, but that's the sauce. And the only reason like Warren Buffett makes so much money is because he's been doing it for so long that now his investment strategy is completely different than an individual because he's using a company that owns multiple companies to invest the profits to make more profits. So it's entirely different strategy. It's almost like a country. It's almost like investing money from a sovereign wealth fund. So it's an
Yeah.
entirely different mindset that you have to have. So I'm not saying like a lot of what Warren Buffett will apply to the everyday person, but the simplest thing of just understanding what you're investing in and finding valuable companies that are undervalued by the market. That's it. And as long as you understand how they're making money, are they making a profit, and are they valued at the right price? That's it. And that's pretty much it. But let me
Yeah,
go
it's
over.
just like with me and quant. It's like a lot
Mhm.
of people say quant's dead, but I understand quant, and that's why I hold it.
Yeah, and there's a lot of risk involved with cryptos, but we'll get into that in a little bit. But as long as you understand the projects that you're investing in, that's what matters. And as long as you can see where the money's going. Um, Last thing, just want to talk about Walmart because Walmart did last week show their earnings, as you guys can see here. Earnings per share, adjusted earnings, 60 cents, and they were up 22% from last year for the adjusted. Their earnings is up 6% for year over year. So I think they're gonna have a good year despite a lot of the criticisms going on and a lot of the shrink loss that they are having as well. You got to also remember Walmart has so many stores that there's shrink coming from all over, and it's not just theft. There's food shrinkage. There's misscanning things. Stuff gets lost in warehouses. Pallets go missing, or someone decides to put a pallet of frozen meat not in the freezer for some reason, and it spoils, and they have to write it off. Truck gets into an accident, you have to write off that inventory. something doesn't scan at the register because someone in corporate didn't input the barcode properly. There's a tremendous amount of things that this large company can have, so they have to overcome that. And even when I was in college and worked for Walmart a little, I could tell you a lot of people didn't even process or do inventory counts right there. So it is what it is. I just think it's just they've lost their lack of focus on training, and I think that's going to cause some problems down the road with. And I'm not talking about training on the corporate level. I'm talking about training on the store level. Like it's not like they're not training people how to do the stuff and understand why things have to be done the way
It's
they are.
because their bosses say, "Well, I don't have enough time," and then they say, "Well, my bosses give me too much stress," or "We're shorthanded." It's just a never-ending loophole.
Oh no, absolutely. I 100% agree with that. 100% agree. I think if they solve that problem, that will solve like 60% of the problems they're having is training people right from the beginning, giving them time to acclimate, understand why they have to do things the way they have to do things. Like I think this whole secretive mentality that Walmart has with a lot of things, and plus, like you said, Cody, managers just saying, I don't have the time. You have to make the time to train your front level employees. You got to think of them as like the infantry for an army. If they're trained very, very well to do their job, then the whole unit operates the way it should because the bottom up, everybody's trained properly. If you're not training anyone and just throwing them out there, then they're going to walk away from the front lines or they're not going to know what to do in situations, things like that, right? So when these employees are not trained properly, no one cares, no one does anything. So when they run into a problem, they just say, well, screw it. What do I care? I get paid anyway. That's the mentality. Whereas if you explain to them, because I know Walmart has a store level bonus structure for everybody, not just management. If you explain it in a way and tell them how it affects that store bonus, I guarantee you everybody will.
Well, I thought Walmart did away with bonuses, with
Oh,
store
did they?
bonuses. Yeah, when I
I have
worked
no.
for them, they said they stopped doing bonuses in 2015, 16.
Oh, you see, that's how unaware I am. I remember when I worked there. Now, this was like 1999.
Oh yeah, they
Um,
did bonuses.
they did. They had store level bonuses,
Not
which
anymore. They
was
Walmart. And also too, what you said about them being secretive about things, that's very true. It's not like they're secretive about like the stuff they're supposed to be secretive about. Every Walmart I've worked at, every manager I've had, they've got this like secret mentality of if you know, you know, or if you're in the club, and what I mean by the club, as in the team leads and the management, then you know. But when you're like a regular starting out associate, like nobody really tells you anything, and you almost have to just kiss ass just to get your way up. And that's a
yeah,
lot of people. That's what most people say about Walmart.
yeah, and that well, that's the effect of second generation corporatism, where the original founder. Because I can tell you, even when I worked there, that a lot of people complain that all the great things that the original founder Sam Walton did were great, and when he passed away, all those things disappeared, and
Yep.
everybody started hating working there. And that even happened when I was a young man working there. I can only imagine what it's like now, 25 years later, right?
Well, a lot of it too is Sam Walton's kids and grandkids. Like their family went from Sam Walton. I've heard he was a very good dude. He was frugal, very frugal and stuff. But once he died and his family took over, his family was mainly focused on profits, which is okay. I'm not saying that's evil, but they took it to the point where people have the opinion they do on the Waltons nowadays.
Exactly. And like Warren Buffett said, your reputation is everything in business. But you also got to understand Sam Walton came from the Great Depression era. So he lived through big wars and the Great Depression. That changed a lot of people. They were frugal, didn't spend on anything they didn't need. Things had, if they bought something, it had to last forever. It wasn't until that generation from starting in the 80s started to pass away that companies diverged from build things to last to
And
put in
maybe and
designed oh man, the word, but designed they basically put in designed failure. So there's a specific term for it, guys. It just left my mind instantly, but it's designed. I think it's called design. I'm not even going to say it, but it's basically they designed it so it's only going to last a couple of years, right? And that way you have to buy it. That's why Walmart sells this toaster for $5 that you have to come back every 6 months to buy. And when they
you know
get you
what?
just out, hold on one second, Cody.
Oh, I'm sorry.
If you can get them to come back for just a toaster, you get them to come back for everything else. That's why their shopping carts are a little bigger than your normal shopping cart. But go ahead, Cody.
Oh, I was gonna say, maybe that's why one of the reasons why some people say war is good for the economy because when you've been through a war, it not only just temporarily, but I feel like it changes your mindset permanently on how you consume. Because people my age, we've never really been through a big war. You know, we've had Afghanistan, you know, we've had 9/11 and stuff like that, but we've never had something like world. I've never lived through something like World War II or stuff like that, and but I feel like if there is another world war or another big war, I mean, first of all, nowadays most people don't want war, but I feel like it would change everybody's mind on consumerism and money and how stupid we've been. And maybe that's why they say war is like a almost like an economy reset in a way.
It is. It is, and but it for whoever to the victor goes the spoils with that. But also, like war generally is the biggest generator of innovation. Just like plastic surgery came about from people dying of gas weapons or suffering damages from gas weapons and the two nuclear uh, weapons that we dropped on Japan. That's where plastic plastic surgery came about because they were just trying to help them, and they found ways. And same thing with like physical education in schools came about because after World War II, people looked around and said, "Oh my God, everybody looks like crap. Let's build a good system for good school lunches, a healthy PE regimen in schools to build a stronger nation." But of course, after 50 years, starting around the late 80s, early 90s, you know, companies being companies started taking advantage of that to make massive amounts of profit while giving the lowest quality possible. That's a reflect of the early 90s. Sacrifice quality for greater profits. Now we're kind of coming back to I don't want to just pay money for something that's only going to last for 5 months. I want to pay my hard earned money, and money's becoming even harder to earn now. It better be for something good. Like if people are going to buy soda, it better taste phenomenal. If people are going to get meat, it better be the freshest meat. If people get a car, this car better last for 20 years. If people get a microwave, this microwave better last for 50 years. This should be the only microwave I buy. Like
That's why
that's
I'm
the
trying to spend money on a car.
and that's what I'm saying. That's what people are. That's the mindset where the Gen Z and Gen Alpha are going to start to switch to, and the generation that comes after Gen Alpha is going to look at that specifically because if you're going to spend money, spend it on something that's going to last you as long as possible, rather than just buy something. It broke, I'll throw it away. I'll buy it again. Just like we're going to see shoemakers come back, repair, seamstresses, sewing centers, they're all going to come back because it's going to be instead of throwing it out, fix it. You got good work shoes instead of throwing them out, get new soles for your work shoes. That's probably what's going to start happening over the next. It's not going to happen right away, but it's going to happen over the next 20 years probably as people adjust because with the biggest period of boom in the economy, we're going to have just as equal as a downturn and stagnation. So it's just how the ups and downs go. But overall, I think Walmart can solve that if they can just focus, follow Target's lead, get better quality products, get better food products as well, get better quality food products, bring benefits back to their workers, like give them slightly better pay. They don't have to be phenomenal, but just slightly better pay, better health care, and they have the power, they have the position and money to do it. Bring back pensions. If I was advising Walmart, I'd just say you could solve all your problems just by saying, "Hey, we're going to bring back pensions." Who's
And
going to?
bonuses.
Yeah, and bonuses. Make it worthwhile for them to show up and treat the store like it's theirs. Because every company,
Bonuses is the incentive of that.
yes, because every company that has a bonus structure from everybody from the sales associate, stocker, warehouse guy, all the way up to the top, they share in it. It does phenomenally well. Amazon had record growth because they would give it their employees stocks as part of their compensation for working with them, along with a good salary and benefits. And when they took that away, the incentive to take care of Amazon at the individual employee level disappeared. And it's right. Who's going to give you the best value if they can't share in the value creation of the company? They're not going to do it. They're just going to clock in, clock out, and if something happens and they don't care, they get paid no matter
That's
what.
what happens
But
when
if
you
they care,
remove bonuses.
exactly. So I think if they bring back bonuses, bring back a better healthcare, and if they announce that, hey, we're one of the biggest retailers in the world, we're bringing back pensions. That would solve all their problems that they're trying to fight with unions. Instead of trying to suck the money out, give a little bit back. You get more. You attract more bees with honey. You know, this is how it is. But that's all I got for stocks. Just the companies like Walmart, Target, the discount stores, all that stuff, and discount anything involving discount, like the 10 box stores, the discount furniture store chains. All of them are going to do very well once everything settles and people start going because they still need this stuff. But anything the luxury brands, they're going to suffer because the influencer bubble is popping. It's gone. It's done. It's popping. So they can't even buy these cars. The exotic car rentals are going out of business. It's only a matter of time before we start hearing losses from Ferrari, Lamborghini, Rolls Royce, Bentley. It's only a matter of time. And like I said, in the late 90s, those guys were on the verge of bankruptcy and got bought out. They were their own companies and got bought out by like Ford, Volkswagen. Who's the other one? Audi, uh, BMW. And I think it was Honda that owned like Jaguar for a brief period before they sold it off again. Because making luxury when people can't afford it, people get pissed off if they can't afford it. So they just, you get a lot of negative traction towards you. And
Yep.
I see the next crop of wealthy individuals, the next 1% of America are not going to be buying this stuff. They're most likely going to be buying either a Ford F-150, a Camry, an Accord, or something like maybe as most expensive like a Tesla or Rivian. That's probably what they're going to buy. They're not going to buy like a $600,000-$700,000 car.
No.
So
I wouldn't even spend $80,000 on a GMC truck. I think that's retarded for a GMC.
yeah, it's like and overall the you guys got to realize like the car market is definitely in shambles right now. People still can't afford even used cars, so expect a lot of these dealerships to start going out. I don't expect the big ones to really have problems. They should have the reserves to make it through it, but it's the local small time ones that they're going to bite the dust. They're going to see a lot of lots empty as they go out of business over the next couple of years because people can't afford it, but they're going to fix their vehicles. So look to like AutoZone. I think AutoZone is going to do phenomenal, phenomenal, because people are just going to try and do it themselves. Like even windshield wipers, changing their own oil, change their own transmission fluid. People are going to learn. People are going to try it, and they're going to figure it out, and they're going to fix it. That's what's going to happen. So I don't think I think now we're going back to, oh, you bought a new car, you must be doing well type mentality.
Yep.
Just like with the housing market, most people who bought new properties only did so, like new construction, did so because they were very well off. That most people bought an older home, and it's just okay. And usually it wasn't like a young married couple that are in their late 20s buying a $600,000 house. They would go buy $100,000 house and just live in it until they needed to absolutely grow into the next house. And even right now, nobody's having more than two kids. Actually, most millennials and Gen Z are having one child.
I'm
So
seeing single moms, even in my age group, single moms, and they already have one kid. Most single moms even are saying, "Nope, I'm not having any more children because with my last man, I bared his child, and he didn't stick with me." Even single moms are saying they don't want any more kids.
yeah, so I don't think there's going to be a need to have a house. I think have a house that's like more than 2,000 square feet. Like you don't need that much. Like a three-bedroom at the most if you only have one child because you have a master, their bedroom, and you have an office. That's it. Or you can go with a two-bedroom house and save 50K on your mortgage. Like I'd say that's probably the best way to go. And if you have to hop around for work, rent out your house, buy another one because it'll be cheap enough to do so. Don't buy like anything over like 150,000. You will become very wealthy doing that.
Speaking of dot, man, I believe coins that we've been holding like dot or quant. I believe actually both of these are at their bottoms right now, especially quant. But Polkadot as well. Like I see a lot of people on crypto Twitter talk about Polkadot. I'm seeing people talk about OpenGov and how
Mhm.
OpenGov has some flaws, and some of the people on OpenGov are making these proposals just to drain the treasury and get like the new meme in Polkadot. People make memes about I need a loan of 1 million dot because a lot of these people who are making proposals on Polkadot, they're asking for a shit ton of dot when in reality, they're not trying to do anything. They're just asking for, a treasury loan. And then on
Mhm.
top of that, it's like Polkadot overall is doing well. We got Jam. Oh, and speaking of Polkadot 2.0 actually just got accepted. 91% of the Polkadot community was in favor of Polkadot 2.0, which I don't know why
Very
there's even
nice.
8% I mean, it's only 8%, but 91% is in favor of Polkadot 2.0 and Jam.
Very nice. I can definitely agree with that.
I voted on yes as well, but
Hmm.
we need to see Polkadot 2.0 and Jam because if we want, I'm not saying Polkadot should be Solana, but if we want more retail, we need more we need more dApps. We need more applications that are retail friendly, user friendly. And I think that's what Polkadot 2.0 is trying to accomplish. And honestly, I think dot 2.0 alone will bring major price action. You're sitting here buying at $7. You ride it up to like 30, $40. I mean, that's a large gain. I'm actually selling all of my dot at $40. That's when I'm fully exiting.
Yeah, and just keep in mind, guys, if you are staking dot right now and you plan on selling it, you got to unstake it first and wait probably about 30 to 45 days, so that way you can move it to an
It's
exchange.
29 days.
Yeah, I would say just do about 30 just to be sure. But it should,
Yeah.
like, if you have the ledger and you're staking through the ledger, it should notify you when it's been released for you.
Oh yeah, I plan on unstaking all of my dot by November because I know for a fact that we're not in a bull run right now. People keep talking about 2024. This is the bull run. Next year is not going to be a bull. No, I don't agree with that. I think things are pumping, and I think that's normal for this stage of the cycle anyway. But we're not at the bottom. We're not at the top, and I think you can get at least 4 to 6 more months of staking before you should unstake for the bull run. That's just my opinion.
Yeah, yeah, I definitely, I'm in full agreement. I think it's we're just seeing we're kind of getting to the true bottom. I don't think we'll see low $6 for if at all ever. I don't think we're going to see it again because
Same
the
thing for
value
dot.
is there.
Oh, I'm sorry.
No, the value's there, and they're launching a stable coin in the near future. So it's like I don't see it going back to those prices, especially not when you're looking at just a year chart. We're not going to see it down in the low fours, high threes ever again.
Oh,
Like
I never talked about this on stream. I've been waiting to talk about this. I almost completely forgot. While we're on Polkadot, one of the people that is actually heavily in parity technologies, they're actually trying to buy TikTok. I'm being serious. The people,
I'm aware of that.
somebody in Parity Technologies had an interview recently with you. Do you follow the Kusam Marion on YouTube?
No, I do not.
He's one of the biggest polka dot YouTubers. Anyway, he had an interview with him, and he said, "Yeah, they were talking about TikTok and the current state of how centralized social media is, and one of them said, well, wouldn't it be cool if TikTok was secured by Dot and the decisions for TikTok were made by OpenGov?" And then he was talking about, yeah, we've actually planned out on acquiring TikTok, and Polkadot is actually fully capable of, running TikTok and TikTok on, parity technologies. It makes a lot of sense because
Yeah.
either way, that would bring a lot more decentralization.
Yes, that is true, but I don't think China will allow that to happen.
Yeah.
I don't see them allowing TikTok to sell, even though it's technically not in the CCCP, but it's the company that owns it is, and I don't think they'll allow them to sell it off. So, if anything, China will just buy it from them and make it a government owned entity, even though it's kind of a quasi government owned entity anyway, which you guys, if you've looked at the Congress session on TikTok and banning, you would know all the details of it. But that's pretty interesting that they would, because I think that would be great for TikTok, especially for the content creators of it, because that allows them the opportunity to potentially earn more money for their content. So, but it's going to be very hard. Now, the U.S. can force the sale of the U.S. division to a U.S. company or person who is in the U.S. They can do that because they can consider it a monopoly and break it up and then maybe give it to someone like Parity Technologies to put it on Dot. They can do that, but it would take a phenomenally long time to do because the government does not move fast at anything. But if it does happen, I would say be a boon for everyone on it that's a creator, because they have now the potential to make a little bit more money, and it's became a little bit more trustworthy to the average person, if that makes any sense. But let's go and we're just going to quickly chat about Quant. There's not a lot of news going on it. I know there's a lot of hate from the crypto community and I get it. They're involved in CBDC, centralized digital banking, working with central banks of many of the first world countries, such as um, Bank of England, even some of the larger banks like Bank of America, Wells Fargo. But my philosophy is that the people in like Goldman Sachs, BlackRock, and JP Morgan are quietly putting money into this through various subdivisions and sub companies. And the people that are running it are all from the financial industry and top leaders in from the tech industry. I kind of think this is going to make sense in the long run, especially with tokenization of real world assets, like your car and your house. It'll make it very hard for a lot of the title scams to occur, because what you guys got to understand is like most of the like just to take the U.S. Some states are modern, but most are not, and it takes forever for you to figure out that something happened to your title. And there are scammers that are making false claims on your title, and it could take years to resolve those issues. So you just got to be careful. Like if you're living in like New York or New Jersey, they're mostly modern, so everything's kind of secured in their online systems. But like places like Nebraska, they're still doing it the same way they did in 1950. So, or like Oklahoma, it's the same thing. And I think tokenizing the real world assets, which Quant is trying to do, puts it on a blockchain, which makes any changes to that have to be validated through all the validators. Now, I get it that it's Quant is totally centralized, just like XRP is totally centralized. So I get why a lot of people in the cryptoverse just are not trusting Quant. at the moment. But they have a lot going on. Cody actually checked out the Quant network and was fooling around in it, and it seems like a great thing, especially for if you wanted to make a program to do that. However, the tokenization of real world assets is probably gonna hurt. It's gonna hurt an industry. It's gonna make it easier for consumers. If that
Yeah.
makes sense, because it's gonna hurt the like title companies like that. So, but it'll be interesting to see what will happen because now your transactions can happen a lot faster. So instead of taking like 60 days to do an exchange of a title and all this other crap, what is it going to take? Like a few days to do it? It makes it easier for real estate agents because now they can close quicker and get paid quicker. So that's just my thought. I still think Quant is a very good blockchain to watch and ecosystem, and I think they're going to do well in this bull run. I think they're going to
Look
do
at the
very
price action in the past 24 hours, though, like how it's been holding 98.
yeah. We got a little bit of a spike, but every time it goes down, people buy more. And you guys also got to realize there's less and less quant available on the exchanges because people holding quant are not really selling it. They're selling a little bit, but not like vast amounts of it.
I don't see people emptying out their entire quant.
Hmm. But let's talk about Ethereum for a little bit because I don't think I know a lot of people are probably saying we don't care about Ethereum, we're not focused on it, or like a lot of new people to crypto, like oh, it's already hit its highs. I don't think so because, and let me just explain because I think so many meme tokens are on ERC20 platform that you are like by the time they realize that they have to have Ethereum to sell it to move it out of their wallet, they're going to buy it. And just imagine that happening all at once.
Can I tell you a problem that I'm having with Solana's wallet? So I updated my
Yeah, go ahead.
Phantom wallet. I updated it. Guess what? I have for the past 2 days. I only have like $10 to render anyway. I haven't fully started buying render, but Solana will not let me send my transaction. Like I've updated the app. I have a bunch of Sol in my wallet. I have
Hmm.
over one Sol in my wallet, and I can't even send transactions. It's blocking me from sending transactions. I Googled it, and people say that it's a network issue. So I can't even send transactions on my Phantom wallet because the Solana network is so congested. And this is why Ethereum has gas fees. That's the blockchain trilemma.
Yeah. And I know that Solana is still being touted as the ETH killer, but it's just crashing, network problems, inefficiencies in the blockchain, and that could you imagine? Like Cody's frustrated with just $10. Could you imagine if you have $300,000
That's
and you're
why I'm not
trying
buying
to
render on Solana anymore. I'm not buying any more Solana because, dude, my money is stuck on there. If I had $10,000 worth of render on my Solana account, nobody would be able to help me. It's not like I can contact the Phantom Wallet devs and they can move. Nobody can help that for me. I updated my wallet. I deleted the app. The app is updated. I have Sol in my wallet. I have the main native token of Solana in my wallet, and I'm still not able to send any transactions. I even tried $1. It wouldn't even let me send $1. I can't send any transactions on Solana because the Solana network, it's just grifting. It is grifting. Ethereum has never given me problems. I've never had a problem with ERC. I've never had a problem with swapping. You know,
Yeah, I get your frustration. So could you imagine the average retail investor using the Solana wallet? Not because they're not going to take money out right away, so they're not going to experience this problem yet. And then all of a sudden, they want to cash out their profits and they can't.
dude, I'm so glad I tried to uh, send a transaction because, dude, I was thinking about adding thousands of dollars into render on Solana. You know how much money, if I had $10,000, you know how frustrating that would be that you can't move it? The error that I get is app transaction failed. It doesn't even tell me why the transaction failed. I go on the
Yeah.
Solana stand. It doesn't tell you why the transaction failed. It does. It just says app problem, app problem, app problem. Like I can send you screenshots. There's nothing that it tells me. I have one whole soul, $146 worth of
Mhm.
soul in my wallet. Can't even move that. I can't move render. I updated the app. I even tried using my ledger. I mean, could you just imagine having thousands of dollars that you can't even move?
Yes. And then when the market dips and you lose all the profit, oh, there's gonna be some frustration. That's why I'm saying, you guys, when you try out new things on crypto, especially anything Solana related, try it with $10 first. That way, if you run into a problem like Cody is, you only lost $10 versus
Nobody's
trying it with
fixing it for me
1,000 or
either.
10,000. Yeah.
I
And
posted it on Reddit. Nobody can give me a solution. Everybody says, "Oh, I'm going through the same thing," or "Oh, it's the network issues." Well, the network cannot be congested for days on days like that. And if that's the case, Solana itself is a whole scam. And this is why I've been saying Solana will not last after this cycle. It had its good run in 21. It's having its good run this cycle. But overall, it's just a scam chain. People were saying ETH was a scam chain because of the gas fees. But I've never heard in my whole existence of crypto that somebody was never able to send ETH. Never heard of I can't send my ETH or my transaction didn't finalize. Never heard that with Ethereum.
yeah,
Never.
yeah, and that's why people still trust Ethereum. And I think once people realize that, like Solana's having those issues, like we said, it's gonna fall. I don't even think it's gonna make it through this bull run. I think people are gonna get on it, figure out that, oh crap, this is not good, and it's gonna collapse. This is why I say Solana's probably gonna move to just being a crypto hardware company, just making phones with wallets and fixing that. Because what you described, Cody, doesn't sound like it's the blockchain or the network that's having an issue. It sounds like it's just a coding issue. Like something's wrong in the coding. And if other people are having it, it most likely is, especially if there's low network activity and you're still having a problem, it has to be a coding issue, which is why I try to stay away from Solana. I bought Solana, left it on the exchange and sold it, and that was it. Like right away. So like it was in a custodial wallet for me for a little bit. So it don't matter. If you guys are if you're buying it now, just be very, very wary that this is going to happen. This is why Cody and I always say get a ledger, get a Nano Ledger X or anyone, but mainly the Nano Ledger X because it's by far the best hard wallet and you don't run into issues like this. Everybody's trying to come up with the new gimmick wallet, but maybe they pushed it through too fast and they didn't catch a lot of the coding issues, and now it's taking forever to go back and fix. But again, like coding issues, you don't know it until you start seeing it happen, and that's unfortunate because we're dealing with people's money, and you guys don't have the FDIC to back you up on this. Because like if you're experiencing this with like Robinhood, you can make a complaint to the FDIC and you'll get your the profits that you should have had out because and Robinhood would have had to pay for that. But you don't have that with crypto, which is
Yeah,
why
it
I
sounds
say
like a
like some
coding system.
regulation is not. But anyway, back to Ethereum overall, because like it's probably not going to have like right now a large push in price. We're going to see some fluctuations, but towards the middle of the bull market, when a lot of new retail investors and like the Tate effect happens and they got money in the market and now they want to get money out, a lot of them don't understand that they're buying ERC20 tokens and they're going to need Ethereum to move it off hard wallets or move it anywhere, and they're going to be in a mad rush to just buy Ethereum. And that's going to be the time when you're going to want to cash it out, because I have a feeling that that buy pressure alone and the fact that they're burning it to move other tokens around is going to cause it to break 10,000 easy. It wouldn't surprise me if it even hits like 12 to 13 around it, just because the amount of pressure of buying it's just going to be tremendous, and exchanges are going to run out of Ethereum very quickly. It's going to be like this weird market bubble run within the bull run. It's just like you're going to see Ethereum spike at some point in the middle of the bull cycle because they're going
Chainlink's
to.
doing well too.
Yeah, Chainlink, we're going to get to that one in next. They just dropped like 5 or 6 videos on their YouTube platform explaining some of the new processes and programs with it. So we'll get to that in a second. But like I said, even Chainlink, you need ERC20 tokens. Quant, you is an ERC20 token. You need Ethereum to move it around, and people are going to buy it in droves. Although I don't think many people are going to be moving Quant around till probably the very end when it starts getting close to its maximum height for the bull run. But people are going to need Ethereum. Some people are going to be buying it to invest in it, but mostly people are going to rush towards it because they want to cash out their profits in ERC20 tokens, and they're going to need Ethereum to do so, and it's just going to happen. So I don't know when it's going to happen. It's going to happen when people realize that they need it, and it's probably going to happen when some of those meme coins or some of the random ERC20 tokens hit like the height of value where people want to sell. So that's pretty much all I got to talk about with the tokens. I do want to say that Biden is releasing. I think that new tax proposal on 25% capital gains tax on unrealized gains. I want to just kind of briefly touch on this because that means if you held, like, let's just say you held Bitcoin and it's at you bought it at 40, and at the end of the year it was at 72,000 like it did this year. Or I'm sorry, it was like 16,000 at the beginning of middle of last year. But in last year, right, you'd have to pay 25% of that difference that you gained in value, and that's going to force people to sell. If that goes through, and the same thing with stocks, if that goes through, that could mean a huge difference for the markets because we're going to see another dump cycle, like we always saw with crypto when taxes are coming due, even in a bear cycle, when taxes were coming due and people had to pay taxes off the crypto they earn, they would liquidate, which would cause the values to drop, pay their taxes, and then retail investors who got their returns would then put that money into crypto, causing it to go back up. We're going to see that kind of same cycle, but it's going to be pushed a little earlier, as if you know that you're going to have to pay 25% of your unrealized gains on January 1st, you're just going to liquidate on January 1st. And most likely, most people are going to liquidate their entire position, pay the taxes that they have to, and then re-enter the market once it's all done. I don't think it's going to go through because it's also, that new bill also applies to stocks. And I don't think that's going to be pushed through because that means there's a lot of wealthy people that will have to constantly liquidate, pay taxes, and then buy again. So I don't know how long that's going to be around, or if it's even going to make it. I don't think so. But do expect with that tax bill that everyone under $400,000 is going to pay more taxes with capital gains, more income taxes. Everything's just kind of rising up as we go. So just be aware of that. I think Cody's just disconnected there for a little bit. We're gonna come back in. Here we go.
Oh, I'm sorry. I was
Oh
going to
no.
ask you though, how likely do you think these tax implications are going to happen?
Um, me personally, I don't think they're gonna happen. I think it's just something to announce before the election. So it's like, look at what we're doing. Because that's like a big thing for Gen Zers and millennials is that we should be taxing the wealthy. So I think it's gonna push through. But if you're looking at crypto, you could easily pass the $400,000 mark and have to start paying it. And if you're under 400,000, you're paying more on income taxes. So it's a net worth base, and most people net worth is less than 400,000. Because even if you own a home, you have a mortgage and you don't have a lot of equity in the home. So I don't know what I really don't know what it's going to do for for the average American, other than maybe they're going to start spending less because they have less disposable income. We'll have to see what people think of it, but I don't think it's going to go through ultimately because it's kind of one of those things that hurts everybody. Yeah, it's great that the wealthy are getting taxed a little bit more, but at the same time on that bill, it's also taxing everyone in different areas under 400,000, and once people catch on to that, it's not going to go through. And plus, most people in Congress are above 400,000, so they're not going to pass it either. So I don't even know why it was even proposed. Yeah, we do need new tax legislation. Some things changed, but that one I don't think is going to go through. But it's came about now to create hype before we get into the fall with the election. That's just my thought on it.
Yeah, and you know what I'm seeing too. Speaking on crypto, I'm seeing a lot of people saying we're gonna have a Solana summer, just like in 2020 we had DeFi summer. I mean, it wouldn't be too out of the ordinary, but I
Mm-hmm.
do stick with the traditional summer lull because even in 2021 we were in a full fledged. You agree that 2021 was one of the biggest bull runs ever, right?
Yeah.
Exactly. And we had a whole summer lull in 2021. And a summer lull, for those people who don't know, that basically means that the summer's slow. Like in the summertime, people generally don't pay as much attention to crypto and stocks and investing as they do in the fall and the winter. In the summertime, that kind of goes down because people are out doing stuff, people are out with their families. People are
Mm-hmm.
having, college students, they're out having fun, doing their thing. People aren't really paying attention to stocks and crypto. And people tend to forget about that. And yeah, in 2020, we had DeFi summer. I wasn't around in DeFi summer, but people are saying the same thing's going to happen with Solana in Solana summer. And it could go to $300 this summer. I'm saying if Solana has a max pump this summer, I think it'll go somewhere close or right at $300. It's possible, but I stick with the summer lull.
Yeah, I think it's gonna be a summer lull, but I do think Solana people will be paying attention to it as CNBC keeps talking about it, and other YouTube channels keep talking about it. It's still on the forefront of the average retail investor's mind, and the crypto influencers also talk about it still too. So it's not going to disappear over the summer. It's probably going to maintain what it is, go up and down in between the mid to high 100s. And then, but once people figure out that the network itself has issues, it will tank. Once that happens, it'll be probably one of the few cryptos that's in the top 10 that tanks during the middle of a bull run, because once people figure this out, it's gonna all hell's gonna break loose on the markets.
And if it already happened in 2021, which is when the liquidity was high,
Hmm.
imagine when all the retail investors get in and the liquidity's high and the volume's high, and it breaks the network.
Exactly. And right now, guys, people people are going the average retail investor is going to be looking for crypto to be their financial savior, and they're going to flood in, and they're going to flood into what is being pushed out there, which is going to be the meme coins, Solana, Ethereum, Bitcoin. A lot of the stable projects like Chainlink, Dot, and everything, they're going to fall to the wayside. But speaking of Chainlink, let me pull up a link here because I just want to talk about it briefly. I have not had a chance to watch the new videos yet, so I can't really say what they were about yet, guys. But they did put in about another 5 new videos, so I definitely suggest that you guys go to their YouTube channel at Chainlink and watch those videos. It helps you get an understanding of what's going on, the developers, what they're doing for interoperability and networking and DeFi. They got a lot going on, and the value is definitely there, because if you take a look at it over the last year, I mean, we're talking about going from the low of what I don't think we have. Do I have the 52-week low here? I might have missed it, but it's down in the $5 up to at the height when the value was coming back at the beginning of this year. We're talking over 20. Now we're stabilizing at around $15, $16, and the value is just staying there because there's more and more and more value being built into the ecosystem. So this is definitely something I would be paying attention to over this lull period because it's going to correct with the market, but at the end, it's probably going to be a good time to dollar cost average, or and pay attention to what they're doing, especially since they have actual real world use cases for DeFi and all that and everything else that they're doing, especially interoperability. They're building more speed and more networking capabilities with their network with other ecosystems. And it's going to be interesting to see what crypto gaming developers kind of flood into there. So just some of my 2 cents on that on there. Um, I know Cody and I have been paying attention to this for the last couple of years, actually, really almost 3 years of it, and it's been I think it's just been an overlooked project since you can see here since the beginning of 2022. It's like I think it went down and people just stopped paying attention to it. But this would have been a good time to just the last year and a half or almost 2 years really to have been in it, just buy it. But that's all I gotta say because I can't really speak on what new is out because I haven't viewed it yet. I just happened to see it. I was planning on viewing it tomorrow for you guys, and maybe we could talk about it on tomorrow's live. But I just want to make sure we are still following Chainlink, and we still think it's going to do well in this bull run.
Yes, yes, I do appreciate Chainlink. I've been watching Chainlink for a long time. Like I remember at the end of 2023, it shot from $5 all the way up to $20. I mean, and it held that $20 mark up until March. After Bitcoin all-time high in March, we saw a sharp decline to like $12. If you bought Chainlink at $12, like that was a solid buy. Chainlink at $12, insanely. That was a given right there.
Yeah, absolutely. And believe it or not, folks, I would not be surprised if some of the other crypto influencers start talking about it because nobody's talking about it right now. Nobody's saying. I don't even think they're paying attention to it,
The
other
only
than
one I
maybe
see is
some
Crypto
coin.
Mason. Oh, I'm
Yeah,
sorry.
him too. Crypto Mason. I've seen Coin Bureau have a few videos on it, but they don't really talk about it outside of those videos.
Because it's not flashy. Chainlink is it's an Oracle. It's an Oracle data feed project. It's a project that can be used with the whole banking system. It's already working with Swift. Swift, like this isn't a speculation. Swift has came out and said they're using Chainlink CCIP. Like it's not just some speculation tool. Like
Mm-hmm.
this has already been announced that Chainlink CCIP is actually working with Swift and major bank players, just like Quant, the BIS, Bank
Mm-hmm.
of International Settlements, the Bank of
Yeah.
England,
Mm-hmm.
Project Rosalind.
Oh yeah, it's still there's still a lot and there's still a lot of value that needs to be brought in, and it's like once you get to the average retail investor talking about it, then we know that the value has become tangible for it, and hopefully you guys have been in and you can be able to make a good profit off on it. That's really the last one I had to talk about. Thank you guys for being in. We're not ending just yet, but we do appreciate you guys coming in because, as always, this live is sponsored by you guys. And if you can hit that like and subscribe button on YouTube or follow us on Twitter and Facebook or Twitch, we definitely. Or I'm sorry, not Twitter, X now. And it's going to take me a while to to get used to calling it that. Um, but give us a follow, and in the bios is a YouTube channel. Give us a subscribe to, and on YouTube you guys can watch all the replays of all the lives and videos that we have. So definitely, if you want to go check those out, there we're not taking anything down. They're there, and they're also there on Rumble as well. If you want to go take a look at Rumble, if you just happen to don't like YouTube. So, but I don't really have much more other than to pick out. Well, I don't say that. Like, I kind of want to talk a little bit about the gaming. So basically, I want to talk about ad share a little bit here. Now, nothing new has really popped up with this one, but the fact that it's working with it's working in the crypto gaming verse world, and bringing like revenue to the developers and users, and the play to earn. I think this is going to be a good a good thing to just to keep in mind. It's like kind of like one of those nice ones. We're not going to hold past the bull run. We'll hold till the bull run and kind of toss it to the wind once you make your money off of it. But it is going to help monetize the crypto gaming world, so that way more people, more users, more people can make more money off of it. We came across this maybe like 7 or 8 months ago, and it's kind of it's in the pooper right now. I won't lie, it's the price is kind of in the pooper, but I have a feeling it's going to rebound well with the coming market. I was thinking about doing another video on this to kind of highlight what new is coming out. But you guys might not see that for a while as to what we're doing with that. I do have a couple videos coming out for banks, because we have Wells Fargo closed their mortgage division a year ago, as well as they're not doing so hot in the auto loans. Actually, let me just pull up Wells Fargo here for you guys. Fargo. Let me share that. Let's see here, because Wells Fargo is getting hit a little bit in the with the it's going to take a hit with the auto loan industry, because if you haven't noticed, some of the YouTubers that own car dealerships that have been some of the YouTubers that own car dealerships that have been kind of showcasing the auction lots. You can see like I think it was 4 out of 5 cars were Wells Fargo. Granted, they're all like Fords, Rams, like the pickup trucks, Chargers, Challengers, Corvette. The cars, the Jeeps and the Jeep Wagoneers, stuff like that. Um, I think they're gonna go down a lot, and I think they've been preparing for this, so they're probably putting a lot of cash aside and just focusing on retail banking. Their price and value is going to drop once the auto loan industry finally that bubble pops and bursts. And this might be another bank to take a look at into, but right now it's just way too high. It's If you don't have mortgages anymore and your auto loans are suffering, and the corporate real estate markets are suffering, where are they making money? And they're only making money on retail banking. And a lot of people don't know, but there's a lot of underwater cases going on. Again, with Wells Fargo targeting minorities with bad mortgages, stuff like that, and targeting minorities with bad banking products. It seems like it's just a running gag with them right now. And I wouldn't be surprised if even Warren Buffett exit out of Wells Fargo completely in his position with it. So I'm just looking at the pay attention, because once all that happens, because the bank's not going to go under.
I
It's
mean,
not.
you could be right about that. I mean, we've talked about some things that we were right about a lot on. I mean, we're not always right, but we have hit on some things.
Yeah, and my feeling is that they are. I don't think they're going to go down. I think they're planning on closing some divisions, because they already laid off another like 5% of their workforce. They're shrinking their auto loan sector, and they're closing out their store financing cards for businesses. So like furniture stores, appliance stores, high purchase dollar stores that would normally use Wells Fargo financing, they are dropping. So I don't see how they're going to make money just off of retail banking. So they must be planning on having a huge loss. Their price will take a hit, probably in the next 2 years, like a total of a 50% drop, maybe even 70%. And then the value will probably come back to it, especially since one of the court cases was allegedly there was quite a few people reporting that in the mortgage department they were referring to minorities as. Now, this is allegedly, because it's in the they're not even really in court, they're in arbitration right now, so there's nothing, it's just alleged at the moment. But they were referring to people as mud people, and I remember hearing that term too in some banking areas as well. It does not look good, so expect a lot of under the counter settlements to be happening at Wells Fargo. Their value's going to tank, and then they're going to rebound once the everything kind of sorts itself out with the real estate, the corporate real estate market, the auto loan industry, and once everything kind of stabilizes, they'll start to rebound because I don't see them going out of business. They're not going to go out of business, but they're definitely not going to make a lot of money over the next couple of years because retail banking, especially with everybody not having money, the only thing they're making money off of is fees, and even that's restricted because they can't charge multiple fees anymore. So they're only going to make so much money, and they can't have that many bankers. They now can't have sales goals for bankers anymore. So then they're not going to be making they're not going to be making any money, especially since they can't make it off of credit cards, bank car loans, and small business loans anymore, and they have to pay a higher interest rate on any more money they borrow from the central bank. So it's going to be pretty interesting to see what happens with Wells Fargo over the next couple of years, especially since they're so heavy in auto loans, and they've been giving out loans for all those Challengers, Chargers, all those high dollar loans with loaning over value of the car, which was the dumbest thing that a bank could ever do. They should only be lending 75% of the value of the car at most. You shouldn't be doing 100% of the car value plus taxes and title. Like that's just absolutely absurd. And that's what they were doing, which is why so many people were getting Chargers and Challengers with no money down and Hellcats and stuff like that. And because the money was zero to pay back for them, like the risk, I don't know what they were thinking. Like I don't know why they equate like I'm not paying for this money, so it's zero risk, but you still got to pay the money back. And now the money's gone, and you got a car that's either salvaged out because someone wrecked it, or it's not in good condition. They couldn't maintain it, and now it's sitting on a lot in auction, collecting dust and losing value. So I think that's just overall going to be.
Could I ask you a question that would be good for the audience too?
Oh yeah, go ahead.
What do you think needs to be done to regulate short sellers?
Regulate short sellers.
Yeah.
Um, you mean short? You mean shorting on the stock market, right?
Yeah.
Okay. Make it an accredited investor. That'd be it. Just make it so that you can't hop on Robinhood with $500 and try to do it, and stop allowing to borrow 10x on leverage for it, because that's where people are starting to run into problems. They borrow 10x on leverage, put the short in, the stock goes in the opposite direction, and they end up getting killed. Like I remember this one guy who did 20x leverage on an an Apple short, which is ridiculous. Guys, don't ever short Apple because they don't go. Whenever that happens, they don't go down. They always go up. And I think he lost his entire portfolio and his I guess retirement savings and other things. Because what a lot of average retail investors don't understand is when you put in a short and when the strike is called, it's not like, oh well, I have to set up a payment plan to pay it back. No, you got to pay it back at the end of market. And if you don't, they take your stuff and they liquidate what they can to cover the loss. Then they'll negotiate on whatever's left. It's not like anything else. You can't declare bankruptcy with it. It is in essence gambling. Now you can make educated short calls, but I wouldn't do it unless you were able to cover the loss, and I wouldn't borrow to because essentially you're borrowing to borrow. That's what, because when you short it, you're borrowing the shares. So when you short it, like if the stock's at $10, you get all the shares at 10, you sell it, you pay the interest until you hit your strike price, and you pay it back at, like, say $2, right? That's how you make money. But like the guy with Apple, he put the short in, got the money at 120 and was paying interest on it, and then it went to 180 by the time the strike happened, and then he had to pay back 180 valuation of shares. So, and it's not like you're paying back the dollar amount, you're paying back the share amount. So if you borrow 10,000 shares, you have to return 10,000 shares. But I also don't like the fact that like Robinhood allows the average investor to lend shares in that. That is highly risky because if they don't pay back, you're not FDIC insured on that. So if you lend out 100 shares of Apple and the person can't give you those 100 shares back, you lose the 100 shares.
Damn, kind of like a smart contract fail on Ethereum. Like if
Yes.
the smart contract like somehow fails or doesn't go through, well, doesn't happen.
Yes, and that's what people don't understand about it. And this is why you see a lot of people lose and people keep saying it's gambling. Even a lot of stockbrokers don't really understand what a short really is. It's highly risky. Even like that infamous trader Robert Ackerman, when he did his short on Nutris system or whatever it's called, he lost a lot of money. He lost like billions of dollars on that.
I will add Crypto Kitty shorting Luna. I'm not going to say, because at the end of the day, it's all gambling, right? But I will say when it comes to something like Luna, that was an educated short because at that time, CZ was exposing SBF. And around that time, you had the information available, not widely available in your face, but you had to be in secret like discussions or you had to be in like these wealthier groups to know that Luna was going to collapse. So I would say on his end, shorting Luna, that was educated.
Oh yeah, I mean he basically shorted Luna on public knowledge and probably rumors that were like spreading around, and that's what he based that short on, and he made a lot of money because when you do a short, whether it's on crypto or stocks, you get what you're shorting, you sell it, you pay the interest until it hits the price you have to pay back.
Him and Do Kwon were having a public argument, Roaring Kitty and Do Kwon. Do Kwon was literally said in a tweet that he's an idiot for shorting Luna and that Luna's okay. Do Kwon was pretty much fronting, in the public eye. And Kitty was
Mhm.
saying, no, you're not doing well. He literally said the coin's going to zero, bro. That's what Kitty tweeted. He said, no, your coin's going to zero. That's what he told him. And then he was right. Do
Yeah,
Kwon was calling him stupid, was calling him names, like belittling Kitty just because he knew off of public knowledge and rumors that, hey, bro, Luna's shit. You're all lying. It's full of shit.
yeah. Well, it's one of those things. Think like an algorithm based stable coin with a paired coin can just cause a lot of problems and could potentially like devalue very rapidly. There was a lot of risk involved in it, but there were a lot of people that made a short. There was a lot of people that made a short on it. Um, but that's just that's probably the best knowledge is don't short if you don't have the funds to cover it. Don't borrow to borrow money. Like
And
that's just
don't
bad.
short unless you truly, not only in your intuition, because even your intuition sometimes can be wrong, but if you actually know, like for example, Kitty, like you have to learn from these successful people. You have to take away something. You can't just read a story about them and be like, oh, cool, bro. Like, nah, you have to take away. I have to take away something from everything I read. And what I took away from Kitty is if you're going to make a risky decision like that, do it because you know something's going to shit or put a
Mhm.
long on it because you absolutely understand the company, you understand the valuations, you understand what products they have to where, oh, if I'm going to place a long and so-called educated long, which is really a gamble too, I mean, then so do it. But don't just like those Wall Street kids, they just randomly play shorts and longs. Like, no, you're going broke.
Oh, absolutely, absolutely. But I gotta go, Cody. So we're gonna call it a day because I gotta go home now. But thank you all guys for sticking with us for this almost 2 hour live. We definitely had a lot of great topics to talk about. And if you came in late, you want to watch the whole thing. I know that Facebook and X don't let you. I don't think they let you watch the replay, but you can go on YouTube and Rumble. It will be there. Just go to the live tab on YouTube, hit the link in our bio to send you over to the YouTube. It's at Simply Investing 6638. So definitely take a look at it. We definitely really appreciate it. And if you can give us a like and subscribe and follow, really helps us grow. We are growing pretty fast, and we definitely had quite a few of you guys in here for our almost 2-hour journey. But thank you guys, and we will catch you guys